3.8 trillion. Goldman thinks AI is going to bulldoze right over global conflicts for a massive M&A wave.
Pure banker hopium. You can't just sprinkle AI on everything and ignore reality.
Tell that to Apollo, they just dropped 3.7 billion on a Japanese glass maker.
Wait, literal windows? Where is the AI angle in sheet glass?
There isn't one. Legacy industrials are back. Plus, Gilead is casually writing a $2 billion check today.
Mostly cash up front, actually. Let's see what is hiding in those footnotes. The rundown. Goldman is throwing around the number 3.8 trillion for pure M&A volume in 2026.
I saw that. They think AI and cheap money are just going to steamroll over all the geopolitical mess.
I read the note. It's pure banker optimism. Lazard is saying the exact same thing, calling it a K-shaped recovery. But look at the FTC. They're literally staffing up for a massive pharma brawl.
Speaking of pharma brawls, Gilead is dropping $2 billion on Ouro Medicines. $1.5 billion of that is upfront cash.
For autoimmune T-cell engagers, which is fascinating because everyone is so obsessed with weight loss drugs right now, but Gilead is quietly building a fortress in autoimmune.
It's a smart pivot away from the noise. You know what else is a pivot? Danone scooping up Huel.
Oh my god, the tech bro sludge.
Hey, I drank Huel during my analyst years. It kept me alive during 3 a.m. pitch deck revisions.
That explains so much about your personality. But seriously, Danone, the yogurt people, buying celebrity-backed protein powder?
It's an incredible play. The margins on that stuff are ridiculous. It's basically flavored chalk in a nice bag.
I completely disagree. It reeks of chasing a fad. Danone is going to write down that goodwill in 3 years. Mark my words.
We'll see. Meanwhile, Olympus Partners is flipping the retina business of EyeSouth to Cencora for a cool $1.1 billion. Classic private equity carve-out.
And speaking of private equity thirst, Blackstone is reportedly kicking the tires on a global cricket league.
Live sports, the ultimate undisruptible asset class.
If you actually understand cricket, which I absolutely do not.
Nobody in New York does. You just buy the broadcast rights and watch the cash flow.
Right. Before we move on, did you see Perfect Corp?
The beauty tech company?
Yeah, their board just scrambled a special committee. A preliminary, non-binding, going private proposal just landed on their desks. Nothing screams corporate drama quite like a hastily formed special committee on a Tuesday.
I love a good going private scramble. But none of this is our top story. Because Apollo just wrote a $3.7 billion check for a Japanese glass manufacturer.
Nippon Sheet Glass.
Right, Apollo buying legacy industrial assets in Japan is a massive signal for where the smart money is actually going. We need to unpack this. The big one. I just can't get over the sheer size of the check. $3.7 billion for a glass manufacturer.
Enterprise value, Nate? Let's be precise. But yes, Apollo buying Nippon Sheet Glass is exactly the kind of unsexy, heavy industry play that tells you where private equity heads are at right now.
Boring is the new software. I used to pitch these legacy industrial deals and the partners would literally fall asleep in the room. Now, Apollo is treating a Japanese glass maker like it's the next OpenAI.
Well, I read the filing this morning. And honestly, I'm struggling to see the upside here. It's a slow-growth legacy asset. They're basically buying into a highly cyclical market right when global manufacturing is looking shaky.
You're missing the macro picture entirely. Goldman Sachs just put out that wild forecast, $3.8 trillion in pure M&A volume for 2026.
I saw the note, monetary easing and AI investments overpowering geopolitical headwinds. It's a very bold claim.
Exactly, and if you believe that, if you buy Lazard's whole K-shaped recovery thesis, you need hard assets. Think about what AI data centers need. Think about what next-gen auto needs. Glass, it's literally everywhere. Apollo's just skating to where the puck is going.
Oh, come on. Skating to where the puck is going. You sound like a managing director trying to justify a crazy multiple.
Hey, I resemble that remark.
Apollo is just flush with cash and desperate to deploy it. They're paying a premium for a business that has single-digit margins on a good day. I looked at Nippon's debt load before this announcement. It was heavy. Apollo is essentially stepping in to refinance, strip costs, and flip it. It's pure financial engineering, not some visionary tech play.
Financial engineering pays the bills, Maya. You buy it, you optimize the supply chain, you carve out the European footprint, and suddenly that 3.7 billion looks like a massive bargain.
Or you get stuck holding the bag when commercial construction demand craters. I just hate the valuation. The math only works if everything goes perfectly. And since when does everything go perfectly in heavy industrials?
I guess you could say Apollo's thesis is a little fragile.
Don't do that.
I had to. It was right there. A highly transparent deal structure.
I'm literally cutting your mic.
I'm done, I promise. But seriously, the heavy industry stuff is fascinating because everyone else is obsessed with tech and pharma right now.
Which is actually exactly where we need to look next. Because while Apollo is playing with glass, the FTC is sharpening its knives for the pharmaceutical sector.
Right, Gilead just dropped $2 billion to buy Ouro Medicines, and I guarantee Lina Khan's office already has the paperwork printed out. Voices. So Goldman Sachs is throwing around the big numbers again. They're forecasting 3.8 trillion in pure M&A volume by 2026.
3.8 trillion.
3.8. They say AI investments and rate cuts are going to steamroll right over any geopolitical headwinds.
I read that note. It is weapons-grade banker optimism. You cannot just hand-wave away global supply chain conflicts because everyone wants to buy an AI startup.
Oh, come on. Lazard is saying the exact same thing. Their global head just called it a K-shaped recovery. Sure, geopolitics might tap the brakes, but the momentum is undeniable. Apollo just dropped 3.7 billion on a Japanese glassmaker. The cash is burning holes in private equity pockets.
I am not denying the dry powder exists. I am looking at the actual roadblocks. The FTC just put out a very specific warning saying they are bracing for this exact boom, particularly in pharma. They are highly vigilant. That means subpoenas, Nate.
Which is hilarious timing, considering Gilead just dropped $2 billion to buy Ouro Medicines right into that exact headwind. $1.5 billion of that in upfront cash, by the way.
Exactly my point. Gilead is acquiring autoimmune therapies, and you know the FTC already has that press release printed out and pinned to a bulletin board.
Fair, but if you cannot buy a pharma company, you just buy a sports league? Did you see the gossip on Blackstone?
Please do not tell me they are buying pickleball.
Better. They are reportedly kicking the tires on a massive stake in a global cricket league.
Wait, really? Blackstone is getting into cricket?
Private equity thirst for live sports knows no borders. I guess a sticky wicket is easier to underwrite than FTC approval.
That is actually brilliant. Less regulatory scrutiny, massive international broadcast rights. Speaking of things trying to dodge the spotlight, we need to look at what Perfect Corp is doing with this sudden going private proposal. Spill the tea. So, a preliminary non-binding proposal lands on the desk and Perfect Corp immediately panics and forms a special committee.
Hastily forms. That was the exact whisper on the street. Hastily formed, or you know exactly what that means in banker speak.
It means the board was completely caught off guard. They have no strategic alternatives queued up, and the founder probably hates the price.
Spot on. It is full fire drill mode over there. But honestly, the going private drama is just the appetizer today. The real tea is Blackstone.
Oh, right, the cricket rumor.
Not just a rumor, Blackstone is reportedly kicking the tires on a massive stake in a global cricket league, which frankly I love. Private equity and live sports is the greatest asset class of the decade.
I completely disagree. It is a total vanity play disguised as a media rights strategy. You really think Blackstone's limited partners are screaming for exposure to wickets and whatever a bowler is?
Yes, look at the cash flow on these international leagues. We are talking about 1 billion fans globally. It is an absolute gold mine. It is the ultimate moat. You cannot replicate live sports.
You can, if you just invent a new league, which happens literally all the time. Look at golf. I am sorry, but when Goldman Sachs is out here predicting $3.8 trillion in pure M&A volume for 2026, I want to see private equity buying real, tangible assets, not sports teams.
Goldman is predicting that 3.8 trillion because of AI and monetary easing. But the ego deals never sleep, Maya. The Lazard guys are right about a K-shaped recovery, And the top of that K is absolutely buying sports franchises.
I will believe the returns when I see the actual exit multiples. But if you want a palate cleanser from the vanity projects, we should probably talk about what Apollo is doing in Japan with $3.7 billion. Tomorrow's radar. I'm keeping my eyes glued to the Pakistan Stock Exchange tomorrow. The technical approval for the Telenor and Ufone merger is finally hitting the tape.
Wait, really? A telecom merger is your big radar pick? I thought for sure you'd bring up Perfect Corp's board scrambling today.
Over a preliminary, non-binding go-private offer. Non-binding is just corporate theater, Nate. The telecom filing is actual market consolidation.
Fine, but you're ignoring the best gossip. Blackstone is reportedly kicking the tires on a global cricket league. Private equity buying into cricket. You have to admit that's objectively hilarious.
I'll admit it's a highly creative way to burn management fees.
Hey, bankers are just trying to hit Goldman's $3.8 trillion forecast for next year. They'll buy anything with a broadcast right.
Assuming the FTC lets them, they're already warning about a massive deal crackdown.
Which means we're going to have plenty to argue about tomorrow.